The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.
For over 95 years, we've set the bar. Power, we restored it. Protection, we reinvented it. Record yields, we redefined it. If there's one thing we know at FS, it's that just because something hasn't been done, doesn't mean it can't be done. We're never satisfied unless we take your farming operation to the next level. Run your equipment at peak efficiency and bust the bins this season. Visit fssystem.com.
Well, what on earth happened to soybeans on the day Wednesday? If you looked at the commodity screen early in the day, you were thinking it's going to be a really nice day across the board. Beans were up double digits, and then by the close, we were only up a little bit. So what went on? What happened? Is there any reason? We're going to try to make sense of that and more. We're talking markets here today on Market Talk with Mike Zuzolo from Global Commodity Analytics. Mike, thanks for joining me. And man, oh man, I can't make sense of this. We've been hearing all this talk about South American weather issues. We've been hearing rumored Chinese soy purchases. I'm thinking this bean market's going to end the day on a high note, and then we just fell apart. What happened?
Yeah, this is a tough one because we're going into the WASDE report, and there's a couple different explanations that I'm going to throw out at you, Jesse, and out to the viewer today. It could be just good old-fashioned running out of buyers with buy the rumor, sell the fact, because we did see China actually come in and buy an aggressive amount of soybeans. That had been talked about for most of this week. And I started to hear numbers yesterday as far as the number of cargoes. By the time it got to about 9 o'clock last night, I was seeing 10 cargoes being thrown around. The purchases that USDA announced today, coupled with the unknown purchases, would say, okay, that number is more like 15. And therefore, it was better than the trade was expecting. We bolted higher and checked up against that 1374 September high or close to it in November beans. Still lead month, but only a couple hundred contracts traded today. And we could not get above that. And I think that may be part of it. And we got to remember the November is getting ready to go off the board next week. And so it's lead month futures though. So that's one aspect of it. The other aspect could be what's happening in Brazil in this flooding in the south. And what we did today for the viewer was we're showing you a 30-day accumulated precipitation map, and Rio Grande do Sul, Santa Catarina, and Paraná are down in the tip of the southern parts of Brazil. You're looking at the worst parts in the last 30 days of these areas of 20 inches of rain. And even for Brazil, that's too much. And that's right smack dab where the port of Paranaguá is. And recall that we've had problems getting ships out of Paranaguá already, and then this rain came. Well, this is a real-time vessel lineup that I'm able to look at because of the subscription I keep with the software application that I utilize. And, you know, you're talking about 30, 40 ships that are just sitting there. If they're a solid dot or a solid square and they don't have any kind of arrow movement to them, they're just sitting there. So it could be a situation that these ships, some of these ships, have literally been canceled and they're, done paying demurrage and they're moving on up to the United States to get soybeans from the United States, especially with the Mississippi River maybe starting to get a little bit better here for the next week, week and a half. I doubt that these ships would go to the Pacific Northwest, but be that as it may, it could be a situation where this rain and the currencies, keep in mind that the Brazilian currency has hit a 6-week high against the US dollar. That's just going to give China more impetus to buy more and buy for the near term. And that's where these cargo purchases we heard about were something around November through February, if memory serves me right. So I'm thinking that's what's going on here.
That's a great explanation. And I fully agree with you with what you're saying here. And well, let's look at the world soy prices. You brought up the dollar and maybe some of those ships coming to the U.S. And I know before we jumped on the air, you were telling me about this chart specifically. So walk us through What else are you seeing here that could be an indicating factor as to why the soybean rally faltered out midweek?
Yeah, one of the biggest reasons why I elevated the potential that we're seeing ships changed out from Brazil to the United States was this chart. That orange line, the Brazil bean price at the port of Paranagua, that price yesterday at this time was where the stop sign is on that chart, around $511 a ton, and it just completely deflated down back below $475 a ton. And when I saw that at midday, when I was creating this chart for your program, I thought, well, this would suggest the beans could go negative on the day. And then that got me looking at the lineup and the demurrage potential, and that as an explanation to what's going on. And so, in the big picture, what I'm trying to present here is, if this is the case, then China is not increasing their purchases, they're substituting their purchases. And this goes right back to the WASDE report tomorrow, and whether China's imports will stay at 100 million metric tons, or whether the trade, which I think is priced in trade expectations of a bigger number, like 105 million metric tons, I think that could be one of the big keys to what the WASDE report does to the price action after we see the numbers released.
And that's a good point, because I was going to ask you a little more about that WASDE report coming up on Thursday, and all the talk about soybeans, the U.S. balance sheet potentially getting tighter. But yet, if we see some numbers there with China's imports, there's a lot to take in here, and it could be, as it always typically can be, a volatile day on Thursday when those numbers get released here, Mike.
I'm almost guaranteeing you it will be a volatile day, especially given today's price action in both the beans and also the corn and wheat, because we were doing that stereotypical buy beans and sell grains heading into this week's report until Wednesday's trade. And that's when the wheat lit up and, led gains. I mean, 3.6 percentage points higher, making some distance, getting some distance away in hard red and soft red from those major 2+ year lows that we came dangerously close to checking and even potentially violating. I think we were within a nickel of the hard red wheat major low that we had put in these last couple months.
Let's talk more about the wheat market, because to your point, we did hold and had a solid day. I know you look at the EU wheat quite a bit as well to help determine some of the factors that could drive the U.S. Trade here in Chicago, KC, Minneapolis. So walk us through this chart. What are you seeing right now in European wheat, Mike?
Yeah, and one of the big reasons, you're absolutely right. One of the big reasons I look at the EU wheat is because they should be the next in line for the big exports once the Russians or Ukrainians are done feeding that part of the world. And I think it's very worthwhile noting, before we go into any of the supply-demand fundamentals and export issues and good things that we heard today, is the macro side of this market, because you and I have talked a lot about this. We've gotten the Federal Reserve report past us. This is the kind of do or die week for the wheat after the WASDE report comes out. Can we get traction? And I find it very interesting that the Russian rubles hit a new 3-month high against the US dollar as of today. I think that is in part due to the Federal Reserve policy shift. And I think that's also maybe due in part to more and more people with the knowledge of what's going on in Ukraine are starting to wonder whether Ukraine's going to lose Western support militarily. And one day we're going to wake up and there's going to be a armistice and a peace deal signed between Russia and Ukraine, and actually Russia wins. And I think maybe that's also bringing back the ruble a little bit more as well. But be that as it may, whichever reason it is, we are seeing that ruble strengthen. And what was really nice to see on the supply-demand side of the equation today, Jesse, was Algeria is tendering for almost 700,000 metric tons of wheat. Russia's the cheapest, but no one in Europe that I could find had made the comment or saw that Russia was part of that tender. So you put that together with the fact that Russia announced fresh export curbs the second half of this marketing year, and I think that's why this wheat market had so much steam, along with the drop in production on the Rosario forecast right ahead of USDA's numbers tomorrow, which that would put USDA about 3 million tons bigger in Argentine production versus Rosario's numbers today. So tomorrow's wheat number globally may not be as big as the trade was expecting.
We are talking today with Mike Zuzolo from Global Commodity Analytics here on Market Talk. And Mike, let's shift over to the corn market. Corn seemingly sticking with the wheat trade on Wednesday. I know in the case of D's corn, we violated some of those summer lows, I believe, here in the last couple of days, but we're able to move a little bit higher on Wednesday. You look at the monthly corn continuation chart here. What's your take on this corn market as a whole here midweek?
Yeah, I'm going to take the corn at face value at this point, Jesse, because if the wheat can find support, I know we're getting big Eastern Corn Belt yields. I've been hearing from clients in Ohio and Indiana a lot better yields than expected. I've heard Northern Illinois guys telling me that their later corn's actually better than their earlier corn near Princeton, Chenoa area. They're running 250, 260 corn yields. And so I am nervous about what USDA says tomorrow. We'll see if we've packed that into the national yield, though, in their state-by-state updates. So what I'm going to do tomorrow is look at this monthly chart again. I'm going to look at it especially on Friday. And if we're above the monthly high of 481 and a quarter, I'm going to suggest to my clients, since that's above the 200-month moving average, we've got a good likelihood that we've got a double bottom in place. If we go below this month's low of 468, we're most likely going to have to go all the way back down to that 450, 455 level and test those earlier lows. But I'm thinking the fundamentals in the corn globally are tight, but here domestically, I'm very nervous about USDA pumping up the production, lowering the export demand, and therefore giving us a bigger carryover. So I'm going to watch this chart real carefully.
And you bring up a great point. I was going to ask you that if we do violate some of these lows again, where would we end up? And you mentioned that 450 level. I wonder, Mike, and this is just me thinking here, has this corn market largely found fair value for the time being, do you think? Or are we still trying to maybe search for that fair value in this corn market overall?
Yeah, that is an excellent question, because it really does. If we really do come in with a 2.2 plus billion bushel corn crop, I think the trade's going to immediately look at the wheat and say, okay, how much wheat do we have then? And if we don't get a friendly report and reaction in the wheat market, and we get a big U.S. crop ending stocks number, 450 may not hold us. We may need to go back down towards those 2019 highs, and that's those areas real close to 450. And check those levels. And if we erode into that, then that 440, 435 level is an area that would be around the end of the year of 2020. This is getting into territory where a December corn put could be very good property, because the December options have really lost a lot of value. They're very sensitive to the market at this point because they have a very limited amount of time decay to them. So I'm really not going to be pressured to recommend cash sales to my producer clients at this point in corn, but I could easily slap on some puts if I don't get the price reaction this week that I really want.
Mike, let's jump over to livestock. I want to make sure we have enough time here. This cattle market has been quite a ride the last couple of weeks, and really for most of the last couple of sessions, we've been trending lower in fats and feeders, and then on Wednesday, we found a little bit of support. So walk me through what you're seeing first in the live cattle trade as we take a look at this continuation chart.
Yeah, I hate to put so much on the WASDE report for the livestock, but I think it's appropriate because I think I've been correct about the seasonals, the Thanksgiving, the pork, the poultry competing with the beef, and also the imports, Jesse. Australia just released some fresh numbers on their imports. They're up 40% year over year of beef exports coming into the United States. They're looking at the United States as 22% of their total volume of exports at this point. We're their number one customer. And this is almost exactly what happened in 2014, 2015. Even though we were seeing a declining supply of U.S. cattle and production, we had a strong dollar, and it really brought up the import side of the equation. And seasonally speaking, we don't need as much beef yet as we did 3 months ago when we were in summer grilling season. So my take is very simple. The cattle, between the seasonals, the technicals, and the funds, and these imports, we've looked at the abyss. We've looked at the edge of the cliff. We've walked back from it. But I'm nervous that the WASDE report will put us back over the cliff, meaning the technical support lines like this December cattle continuation chart. This is December cattle going all the way back to 2013. only December futures, no other futures. And we went down and hit the major support channel line that's been drawn off the 2019, 2020 lows. If we take that out, I think just like December corn, it's worth getting December cattle puts in place just because we don't know where the next stopping point is, because we don't know how hard the funds would want to hit this market.
And I was going to say, to your point there about getting some December cattle puts in place, if we were to violate some lows in this corn market, thinking about over on the feeder side, should we be thinking about locking in some feed needs, or do we need to kind of sit back and wait and let the dust settle here for this week? Mike, what do you think?
Yeah, really great question, because the feeder corn ratio is right around 50, and that support has held as well. Feeders divided by corn. If that feeder corn ratio would go below 50, then yeah, I think corn feed needs would be very, very wise to get in place, especially with these wide basis levels. I'm hearing northern Indiana is going from 45 to 50 to 55 under right now. And, there's quite a bit of cattle and dairy, especially in that part of the world. And so I think this is an issue where, yeah, the feed side of the equation really needs to be looked at. If WASDE's report gives us that double bottom in the corn, and then that feeder corn ratio breaks its major support.
Hog market, we were trending a bit lower again Wednesday. Just doesn't feel like hogs can find a whole heck of a lot of support. We try, and it's a lot of stop and start right now. That's the feeling I'm getting. Are you getting the same feeling or something different, Mike?
No, it is like that. And I think it's the Chinese news coming back at us, Jesse. We just had some fresh news. Financial Times did a special write-up on the Chinese pork market, and they made mention of many of the things that you and I talked about. One of the things that I really need to throw back and reiterate is the wholesale pork price right now in China is down 40% versus a year ago. We're going to get brand new inflation numbers from China, I think tonight, actually on Wednesday night. And they're looking at deflation. The market's almost assured of consumer price deflation because of the pork side of the equation. How bad is it? We don't know. But I think that's what's going on with Wednesday's trade in the hogs. And you notice also that pork and bean trade is working again.
Yep.
Hogs fell, beans were higher. And I was thinking, why are these two divorcing? And then all of a sudden the beans went ahead and fell as well. So I am nervous still about Chinese demand for the soy complex, because that pork and bean trade continues to work fairly well.
Good reminder there about that pork and bean trade. Another thing I didn't think about as well. I should have known better on that one. Mike, before we wrap it up today, a couple other things. Our canary in the coal mine friend, crude oil, continues to fall back. Any notes in the crude market right now, Mike?
Yes, 3-month low in the crude oil is not justified at this point, especially with the Department of Energy delaying their weekly updates until next week on the supply side. I continue to see crude oil almost identical to the wheat in terms of market sentiment with the Ukraine war. They're just underappreciating and discounting too much what's going on in the Middle East. So I would say if you haven't locked in fuel needs, with unleaded gas dropping pretty substantially, diesel dropping a little bit in the Midwest, get caught up on your needs for this winter, and even maybe dip into the spring at this point as well.
All right, Mike, final question. Floor is yours. Anything final to share, reiterate, or any other risk management thoughts and tips here heading into the November WASDE report on Thursday?
I've been talking a lot to bean clients and cattle clients this week, and a little bit to corn clients. I think the sell and defend model is a worthy thing to do at this point, Jesse, especially if you're profitable, like in soybeans and cattle, and then come back and defend, because look at what happened on Wednesday. If these algo computer-driven trades continue to put too much discount in the market or too much premium in the market, I think we need to be there for the longer term. So defend soybean sales, get puts in place in cattle if the weekly trade suggests that, and maybe even have to do that in the corn market as well.
Mike, if folks want to reach out to you, get some advice, take a look at all of your great analysis, I know they could do that very easily online. How can they find you?
Globalcomresearch.com. It's globalcom with 2 M's, research.com, and you can sign up for a 2-week free trial.
Fantastic. Mike Zuzolo with Global Commodity Analytics. Always great to talk with you, my friend. Thanks for joining us. We'll talk to you next week.
You too, Jesse. Thanks so much for having me.
And that's going to do it for Market Talk today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.